Hello, welcome to McBoss Capital channel. This is the week ending March 8, 2024. The first thing I want to talk about was the jobless rate, unemployment rate yesterday released on Friday. And you can see, we've been on a downtrend for a while in terms of the unemployment rate going down. But then now, we're starting to see it tick up. So the low was around 3.4%, and then now we're going higher now, 3.9%. So this is probably why the market actually start to react. In the morning it was fine, but then as the day goes on, it got worse and worse, and this could be a problem, right? If this is starting to become real and unemployment start shooting up, then obviously the Fed will have to do something. The average hourly earnings seems fine, it's quite stable, but we did get I guess the early morning people were more focused on the 275,000 job number, which is a positive. But like I said, unemployment rate is starting to tick up now, and it's very consistently, near the high threes, and it looks like it wants to go up now. So that will influence the market. And the biggest thing that the last 2 months since the new year, the market has been focused mostly on earnings, and earnings are pretty much over in general. Like so many stocks already reported. So there's not much catalyst, right, to move the market anymore. A lot of the stocks jump because of their earnings, and so now that the earnings are over, and a lot of the stocks are very extended, so there's really no catalyst to push it higher, right? So the next thing the market is going to focus on is a lot of macro news, right? So for example, like job number. Next week we'll get the CPI number. We'll get more retail numbers. So those are things that the market will really move on. And so the one thing that was interesting as well that I heard was from Tom Lee, and he was interviewed in the middle of the day when the market was heading down pretty hard, and he said that the fact that the market sell on good news, in terms of when he said good news, he's talking about the job numbers here, that tells something, that what the market is thinking of, which is possibly we are going to see some sort of pullback here. So something to be aware of. And and seasonality, and we have seen markets top in early March before, at least for a short-term pullback. That we don't know how much of a pullback it could be, 5-10%, we don't know, but that's something that could happen. So just be aware. And yeah, so there's really not much news Monday to Wednesday. The biggest news was probably just Fed Powell speaking. And so on Thursday, the initial jobless claims rise to 217,000, which is almost near the estimate 215. So Fed Powell was again appeared before the Senate Banking Housing Committee, and basically he said that it's too soon to lower interest rates, but reductions are likely sometime this year. So again, he knows it's coming, but he doesn't want to pinpoint exactly when, whether it's June or even in September. We're not 100% sure, right? At least he didn't say anything. So the market continued to move on and power higher, as the Nasdaq S&P hitting new highs, and then we did see some sell-off early in the week, right? I think, let me just quickly go to my file here just to show market trend. You can see Mondays, Tuesday we have distribution days, and I was like, oh, this doesn't look good, right? So, and then like I said, Wednesday rebound, Thursday rebound, right? And then instead so yeah, so let me put this down here, we'll talk about it in a second. Friday, the job report, I think, like I said, beside the unemployment rate, everything looks fine. But this is, the jump from 3.7 to 3.9%. I think that really starting to paint a picture of what's to come, right? So the Nasdaq hit a high in early trading. I remember yesterday morning was super, euphoric, right? Everything, was up pretty hard too. Like, I mean, Nvidia was up 4 or 5%. A lot of the chip stocks were up. A lot of growth stocks were up too. But then, it really dwindled down by even like, I think 10 a.m. Mountain time here. And yeah, it really started to go down. And so it ended 1.2% down. It was a really ugly reversal day. And yeah, and then, Nasdaq actually have a down week. So we go look at the weekly chart. So this is yeah, so this doesn't look good, right? Like on the weekly chart, it doesn't look as bad, but it's still a down week. And also it hit a new high on Friday, and then, like I said, it really looked bad because it's a outside candlestick, and it closed dead low right at the bottom. So that just shows, someone is selling and not enough buyers, and so that's why it ends up like that. So that's a very bad candlestick, right? I don't think we've seen that in a while. Like if you go back, I don't think we have seen anything like this. Was the last one right here, but even that wasn't an outside day. Okay, so this one is an outside day right here. So this one, and then you see what's happened here. There's a minor pullback, but yeah. So we'll see what's gonna happen this time. But generally, outside candlestick is usually not a good sign. Okay, so that's that. So S&P also suffered the same thing. So let's go jump to S&P chart. Very similar. Here, new high and close at the bottom. Outside candlestick. Again, this was the one, similar one. On the weekly chart, again, it looks fine, but it is a down week. But this one looks slightly even better than the Nasdaq on the weekly chart. So so yesterday, despite a down day, advancers actually held a slight edge over decliners on the NYSE. So that's also interesting. And then it's roughly even on the Nasdaq. So we'll look at that in a second. Also, the Nasdaq shed a few distribution days due to the 5% rule. Basically, when it goes up more than 5% from the distribution day, they get removed. So because it hit a new high in the morning and probably over 5%, they removed that. But then because Friday it was another distribution day, right? So we'll go back to my. So this is actually another distribution day. I forgot to mark it. But yeah, that is a distribution day here. So yeah, so I believe we have 5 distribution days in the last 2 weeks here. So we gotta be cautious about whether this is a intermediate market top. So if I go back to the Nasdaq, look for a second. So now, yeah, we are. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, so we are on the 19 weeks, right? So this is the 19 weeks, and if this is the top, a short-term top, then this would match this one last year, right? Yeah. So prior to that, you can see here 15 weeks up, 23 weeks up. So we're definitely getting very extended. So yeah. So let's go. Yeah. So let's go back to my notes for a second. Okay, so before I talked about the other ones, let's jump to the other index first. So let's go to Dow. So Dow really probably, I don't know if anyone even pay attention to Dow, but you know, look at this. We're 2 weeks down now. You know, so this one has actually topped earlier than others. The RS line, you can see, compared to S&P, is like really down. Look at that. Like, this is not good. So, and obviously, you know, Apple is a big component of Dow, and Apple is not doing well. So here's the top here. So now we are on a downtrend. And this is even before, like I said, this is happening before yesterday, right? So that's something that, like, this will obviously have a really good run, and now this run looks like it has this, you know, it's still looking okay on the chart wise. It's still like, you know, look, you know, I don't like how this is like, so this is below 21 day, and then on Friday it closed below 21 day, so it fell to lift back up, right? And so that's for sure doesn't look good. But yeah, look at the RS line, right? This is really bad. Like, it's just, yeah. So look at Apple here, right? So Apple is a Dow component, and look at that. Oops. So yeah, so this is the peak here, and it fell. You can see it fell right here, and then here it fell even worse. It didn't even come to the peak here, and then that was the last time. And then ever since, you know, this downtrend is pretty severe, right? You can see it's almost 45-degree angle, and now it accelerates. And yesterday it was funny enough because like all the other stocks went down, but Apple actually went up. So some people obviously think this is a possible value buy here, and as it come to the previous low. So, you know, we'll see if this holds, but, you know, it is on the downtrend, so it might come back up here to this line and then go down further. So that could happen. And yeah, so that's where Apple is. And that's probably why, because I think it was down as much as 17%, and that's probably why it's heading down so much, because, you know, it almost followed the same pattern as Dow, right? And but this one is the most obvious one that has corrected quite a bit. So let's look at Russell. So Russell, you know, was on an uptrend, and you can see the 10-day moving average look like this. So it's still intact. So the uptrend is still intact, and, you know, obviously we broke this high right here. The only problem is like, you know, what I don't like about this so far is like how it always finds resistance, right? But, you know, that being said, Russell is always more volatile, and we talked about this before, how it just keep coming back to the bottom channel line. Look at that, right? So it keep coming back, but it's still intact, the uptrend. So, you know, even this week I feel like you can tell it's definitely acting stronger than the other index. So you can see it's an up week actually. It's not a down week, right? But, you know, I am worried though, right? Like, if the other index start to break down, I think we talked about this last week, right? You know, is Russell gonna hold up, or is it gonna come back down, right? And I'm not sure. So far this week it has passed the test. It didn't come back down. It's resilient so far. So hopefully, the market breadth for small caps will keep expanding. If we go look at mid cap, you know, I think, yeah, it's also mid cap here. 400. Okay. So this is where the real strength of the market is. This is the mid cap S&P, and you can see how this 10-day moving average has really, like, it has really accelerated right here. And, you know, you can see how it extended from the 10-day as well. So this is quite you know, bullish sign. So that was a really good run for mid cap stocks. So that was probably the strongest one. So next we're gonna go look at the IBD 50 here. So the IBD 50 got hit pretty hard on Friday. In general, this whole week it got hit hard. You see, Tuesday it was a big drop. It was a big drop, higher volume. It went down, like, you know, it has been definitely volatile. Like, this was the previous pullback, and then this is the one that happened this week, early this week, and then on Friday we have another reversal. So that also higher volume. So Tuesday and Friday you can see the amount of volume came in. So the growth stocks are definitely getting hit right now. Although the chart still looks like pretty good in general, like it's not like, oh, you know, it's possible. Like this one came back to 50-day, as you see, right? 50-day right here. So is it possible it will come back to 50-day? Oh yeah, for sure. There's a high chance actually. But in general, you know, if we look at the weekly chart, the uptrend is still intact if you use the 50-day, and that's probably the thing I think we should focus on more now. Is that, okay, let's just say a pullback is imminent. What's gonna happen? Well, it's gonna come back to the 50-day line for most stocks, and Jerome Powell always says this. It's like every year you gotta be prepared. Doesn't matter how strong the stock you have, they will eventually pull back to the 50-day, and that's where you may want to consider, to add to the leaders that you want. And he also talked about, like, definitely, if you don't hedge using options or any other methods, you definitely should trim when it get extended, so that you have some money to buy back when it's near the 50-day. Of course, that's always a hard thing to do. How much you should sell and all that stuff. So that's based on your own risk tolerance and so forth. Because if you always have to ask yourself, when it's top pullback to 50-day, how much of that you're gonna lose, and how much of it you're willing to tolerate, right? Because what if it breaks the 50-day? And you head down to the 200-day, right? Those are the questions you have to ask yourself. What is your risk tolerance? Are you willing to give up so much? Because as much as Jerome Powell hold on to his stock, he always he does a lot of hedging, right? He either sell, depending where he's at, he either sell call options or sell put options. Sometimes he might even trim a little bit. But right now he's really bullish, so he's more likely to do options than actually trim the stock. So those are things you have to consider when the pullback, because we don't know how big of the pullback. It could be a 5%, it could be a 10%, and when it's 5 to 10%, you have to multiply by 2.5 times usually for growth stock. So if you're down 5%, you're looking at possibly 10 to 15% pullback on your stock. If the market is down 10%, you're looking at anywhere from 20 to 25% on your stock, or even more. So those are the type of general rules, right? For dealing with a pullback and correction. And so yeah, like usually, like this guy broke out. Like if I look at the trend line here, this is the previous peak. So we're already at this point. You see, it already pulled back to this point. The next point it could pull back, that is where there's a lot of support, is this breakout point. So it could go under 50 and then to this level, right? That's this is where the previous support is. And then the final support line would be probably the 200-day line, which is down here. So when we're looking at growth stocks, they probably will most likely follow this pattern, most of them. So we'll see what's going to happen. But this is definitely we're starting to look very volatile. It's not as smooth as one would hope, and so even trying to get into and then that's what I did too this week. I tried a few stocks and I got knocked out, and I'll talk about some of those stocks, and some of them are new names to me, and I was trying them and I got knocked out, right? So even there might be potential leaders forming for the next run, but it's going to be such a choppy time right now that it's probably best to just stay out and watch. And just watch which leaders. And yesterday, Friday, because it's a down reversal day, especially when the day is, reverse that big or it's down a lot, Jerome Powell always look at those days as leader defining day, because the leaders will pop out, the ones that basically standing tall and then not get bobbed down. Those are the ones that probably will lead the next rally. And so you want to watch for those signs, right? Like, make sure you note down all the stocks that are. So for example, we can jump to it right now. So if I go to like, give me a second here. If you go to the IVD homepage, stocks on the move section is probably my favorite screen. And this is a live screen during the trading day. It's probably like 20 minutes, 10 minutes delay, or even shorter actually. But and you can view all stocks, and I think to view all the stocks you need to have subscription. But anyhow, so throughout the day, obviously the reason why this screen is important is because it stocks on the move based on volume. Okay, and so you can see it's sorted by volume. So during the day as it was trading, the one with the highest volume will show on this screen because it only shows the top 20, and so anything that is not at the top 20 won't show up here, based on volume, right? So it has to be obviously on the move, meaning up. You can also check the ones down in price. You can see, look at all these stocks that got hit pretty hard today, Friday. So you can see like SMH, which is the semiconductor ETF, right? Got hit pretty hard here, 157% above volume. Let's see what other stocks here. Marvel, a lot of chip stocks, right? TSM. You can see Nvidia Bull ETF here got hit pretty hard. Costco got hit hard. RateNet also got hit hard. So but I usually only look at the up in price, and so yesterday, because this is such a big down day, you're looking for which stocks are still standing tall, right? And those ones are performing relative better than the index. So so IoT, you see, GE, Vital Farms, Guidewire, Seco, Kawa Group, right? This is a hot stock right now. LPX, that's also hot. Coinbase, Robinhood, Neurocrane, that's also hot. AX Financial, Dexcom, also hot. BGR. So these are the stocks that withstand. You can see there's not even 20 here. So these are the ones that were on higher volume and up, right? And why is higher volume better? Because it shows that people have conviction in these stocks, right? And so if there's no volume and it's up, well, you don't know if there's enough conviction, like people really buy into it. So that means the demand side is strong, right? And so that's why it's good to see which stocks can withstand on a bad day. So these are some of the good stocks that are withstanding. They could be the next leaders. We don't know. You have to watch, and that's why Jerome Powell like watching days that are down big. Who are the leader defining day? Now, with that being said, sometimes when the market is going into a pullback correction mode, they could turn more defensive, which means stocks that are more defensive will start to rise. So you have to ask yourself, right, that question, because if those are defensive stocks, that means they're unlikely to lead in the next rally. So that's something that I have learned as well. So yeah, you could buy these defensive stocks, but when the market is pulling back, and they might give you a few point gain here and there, but they're not going to be your big winners right down the road. So you gotta remember that as well. Yeah, but most of these are pretty strong leaders, I say. IoT was definitely a strong chart yesterday. We can look at that in a second. But yeah, so in general, that's what you're looking for during a pullback and correction. Just kind of note down which ones are the ones that stand up, and then if it keep happening again the next few weeks, you will see which one's standing tall. Of course, some of this could be going through a climax run too, meaning like they will fall last. Just because they fall last doesn't mean they're not gonna fall. So that's another thing to watch out for. So you know, if you buy into, for example, Kawa right now, and they're going through a climax run, well, it's going to top later than most stocks, but that doesn't mean it won't top, right? And when it tops, it could drop 20% in a day, and all of a sudden you buy into it right now, you just lost 20%. So that's something to watch out for as well. So that's why I say be patient right now. If the market wants to pull back, correct, just watch it and see which stocks are holding up the strongest, right? The ones that have the strongest relative strength coming out of a pullback correction tends to be the leader, right? And not always, but they tend to be, you know. And sometimes some leaders come out later, but in general, you know, usually it won't be too bad if it come out early. So anyhow, that's a short discussion on what to look for in this next few weeks. Any question? So the biggest thing that happened yesterday was this bearish move that could impact the broad market, where Nvidia, one of the strongest stocks this year so far, reversed badly lower after hitting new heights. It ended the day down 5.6%, right? It was up, I'm pretty sure it was like almost 5% up in the morning, 4 point something. And so this is this a wake, it's a wake up call for AI-led market rally, right? That's what's one of the headline on IBD newspaper. So we'll just go look at the stock right now, and then we'll talk more about it. Yeah, so it has this like up the stairs, down the elevator thing. I think what's his name? Professor Siegel was talking about this. So when stocks go up, they tend to go up on the staircase, and then but when they're down, they're going down the elevator. So that's what Nvidia looked like yesterday. So let's just jump to it. So here you go. So you're climbing up, stair step, right? And then you can see how fast it dropped, like an elevator, right? And this is these are some of the topping signs. Not saying it will be, but it's definitely some of them. So for example, a biggest range on the daily chart, that's the biggest one since it has breakout. And then it's the highest volume, right? So those are two big signs. It's possible that it can, like I say, we might, if this is like a really strong leader, we could see maybe a 2-3 day pullback, and that's it. And that's what we saw here. Like this was like a 4 down days right here. It's possible we see a 4 down days here, and then came back to 21 day, and that was it, and then it bounced again. It's possible. Like that would be truly impressive, right? But I am worried because it is quite extended. That's the only thing, right? The extension from the 50 day is quite big now. So it's to me, I feel like there's a higher chance of it pulling back more. It might not completely hit the 50-day line, but it might come close to it. So the last support line, if I draw a last support line, like the most ideal support line is probably here, this red level right here. So that'll be around 750. And that will give it a close to, like, I don't know how much correction. What was the high here? That is 74, right? Again, that's just my on hindsight when looking at the chart. I don't know for sure where it's gonna pull back to. So 974 minus 750. So it's like a 18% correction. Actually more. Yeah, so that will give it a 22% correction. So, because this is the last big support level, right? So that's where the last big pullback is. So generally that's become a support level, right? So we'll see. That'll be ideal for a pullback, and that will give us a chance to get back in. Yeah, so that's Nvidia. Let me pull back my notes here. And obviously, and I know the next thing in my notes is how it has hit all the other stocks as well. So that's you know, and I've said this a few times now. Generally, when the strongest leader top, the market will top, right? So at least for, like, you know, for a short term, I still believe in the long-term bull market, but for now, it's possible that we're starting to see. So we saw, like, you know, it hit AMD, Taiwan Semiconductor, ARM, Supermicro, right? Those are the strong leaders. And also ARM will have a IPO lockup period expiring on Tuesday. So this one will be very interesting. Other areas that are AI related that got hit: ServiceNow, Palantir, Net, DDog. Yeah, so lots of guys got hit. So yeah, as I mentioned here, be patient, wait for new opportunities to put your capital to work. Keep an eye out for rebounds from 10-week line. And obviously, like any sort of pullback will give the index, you know, time to form new base formation, and also for the stocks, right? So that's kind of what we're hoping for. Let's look at our. Oh yeah, the other thing that, you know, this, since we're on this chart right now, I just want to talk about quickly. So Market Smith have renamed to Market Search, and one person I know said, you know, this is kind of ironic. The market is at new highs and they change it at the name, and you know, is this a sign of the top? I don't know. just saying. So a couple of new features came out. One is this earnings line. This earnings line is IBD Bill O'Neill founder, his favorite, like one of his favorite thing he likes to look at. Is this line actually represent the earnings, but it's not just that month's earnings or that quarter's earnings. It's actually based on a 4-week average. So because if you look at, you know, month to month, it will fluctuate, right? So it's not always smooth, right? So the way you smooth it out is by taking the average of 4 quarters in a row. That way you're not just looking at 1 quarter, right? So that's what this line looks like. So if you look at Nvidia, let me just take out all the markups for a second, because it's just too many things here. So you see the green line was going up, and then you see by this point, again, this is based on 4 quarters, right? So it won't hit the peak exactly, because it has to turn enough in the 4 quarters to change the direction. So you can see the direction change here. Again, same thing, right? You can see here, down here, negative, right? So but by this here, you saw 3 quarters of strength, right? Strength here. So by this time it starts to turn, because we're taking this 4 quarters, and then we're taking this 4 quarters, and then we take. So this one number is so big that it changes it in 1 quarter, right? So that's how the direction changed right here. So this is a very useful feature, especially for someone looking to hold longer term, because I feel like, you know, if you are, because most people who trade longer term are the people who follow fundamentals very closely, and so this is you know, kind of one way to look at it. The other thing I'll mention quickly, I don't really know much about it, I don't do it, but one of the things that, yes, okay, following fundamentals is very strong, but stocks tend to top even when fundamentals are strong. So when you're looking for a bottom, that's a great thing to look for. Obviously, fundamentals will drive the price, but when the stock top, let's say a bear market is coming, the earnings will still look the best, because it won't go down until, like, you know, much later. And so, for example, you can see right here, the quarters are pretty good right here: 60, 100, 80, right, 60, 59, right? But what happened to the stock price, right? It decreased right here. So you can see, even though, you know, this quarter it started to decrease, right? 60 to 49, 59 to 49. Sorry, 69 to 49. It's really small. So you see, by this point it has already gone down halfway. You see that? So, and then here, you know, minus 51, obviously go down further, minus 50. You see it goes down further, right? So again, you don't know that it will top when the earnings are the best, because it doesn't come usually 1 or 2 quarters later, and by that time the stock could have corrected a lot. So when you're using this fundamental earnings as your gauge, just understand that it's not the best way to look for the top. So one method that they use, which I don't, is they projected the price earning ratio, PE ratio, based on, there's a formula, I don't remember, I don't use it, but there's a price, basically you multiply by, I don't know, the future earnings, which they show here. So let's say 2025 is estimated at $23. And if you were to start buying this year, so you can see this is almost double, right? 12 to 24. So that means if you start at 2024, and they usually don't start, and that's the thing that that's why I don't use this method. I find it really confusing. But because they always say you need to start where the first base is, and I'm like, where's the first base? The first base is really here, right? So this is already second base. So they say you should be calculating from here, not here, right? So anyhow, but let's just use this example. If this was the first base, you would take this multiplied by 2, right? So this is multiplied by 2. So that means that if your future projection is multiplied by 2, then you could take I can't remember the number. You take this price, multiply by 2, and then you multiply by, I can't remember the number. Yeah, some ratio, and then you will get your price, your projected price. So anyhow, sorry I don't know enough details about that because I don't use it, but that's one way to project it further down the road. But again, I think it's just better to watch the stock and see what analysts, because a lot of analysts will project it for you anyway. So I believe yesterday morning was funny because in the morning I think someone raised the guidance for Nvidia to 1200, right? And it was at 974 in the morning, right? It was the top. So if people listen to that and say, oh wow, 974 or 900 something, and there's still 1200 is the target, well, this still 25% gain, eventually it might reach that. Who knows, right? But for now, it looks more like it wants to correct. So and then it might go up higher, so that's what's gonna happen. So that's the trick. Anyhow,
interesting.
Another method that I feel is better to project is IBD. You talk about this a lot in many occasions, even in O'Neill's book, is look at, so this is first base here, this is second base. Generally, most leaders, they will hit about 3 or 4 bases. So sometimes the strongest one will probably even go up higher, like 4, 5, or 6 bases. I think Netflix did that back earlier. Not many stocks will hit 6 bases in one cycle of a bull cycle rally. But some do. But most stocks is about 3 or 4 bases. So this is in second. So and the second one, could be a strong one, and so we did see the strong rally. I mean, they're both strong after first base and second base. The rally are both strong. But generally, like I said, third base will form, and then maybe a fourth base will form, right? Usually that's how long a cycle will last, at least for the strongest leaders. So I feel like that's a better approach. And the best one, a sell sign, is actually when a stock breaks out from a base, a third or fourth stage base, but fell. That's usually a strong sign of a market top. And I think Mini also followed that rule. Jim Ropel followed that rule. I think that's a very telltale sign when stocks are breaking out bases and all of a sudden they all fell, like most of them fell. That's usually a very telltale sign of a top. That's when they trap the most buyers, and things are looking so obvious, right? Because probably the chart will be really strong, going up for multiple years or something like that, and that's when it topped. So yeah, you definitely can go back and study older charts, before the 2022 bear, and see like how they top in late December 2021. A lot of them have that formation where they just try to break out the base, or they couldn't break out the base, but they came close enough to trap a lot of buyers, and that's when they fell. All right. So we look at equal weight RSP. Let's see how it changes this week. Yeah. So this is why the rally has been so strong. The equal weight is doing really well. You can see the trend line right here. This is really superb trend line. If you look at QQEW, so that's the S&P equal weight, and then the Nasdaq 100 equal weight. This one not as, I mean, it's still on the uptrend, but it's not as strong, right? This uptrend as S&P. So that's probably why S&P mid cap is doing well too. Okay. So the other good, the other reason why the rally has been pretty strong is the 10-year yield has been going down. So that's a good sign, right? That's why I think that was the reason the rally also happening. So the oil, the dollar, was stable last week, and then it also fell apart this week. So following the same thing as the yield. And then the oil price, it was not a good week for the oil price. It's basically down for the week. It's not super negative yet, but it is down for the week. So yeah, I mean, it's not like I said, not super bad. So it's potentially just a minor pullback. We'll see if that's true. Yeah, so earnings are mostly over. Market might focus on macro again. Next week we're gonna have a big day, CPI Tuesday. Yeah, basically the Fed say last week, rate cuts, could be happening this year. U.S. retail sales out on Thursday. Empire State Manufacturing on Friday. So the big day is Tuesday, really. And then we have Adobe, Oracle, and Jabil reporting. This is S&P 500 accumulation distribution B+, and then the advanced decline line right here. You can see it's holding strong even on Friday's down day. Look at that. So the breadth on S&P is really doing well, as highlighted earlier by the mid cap, and the Russell is still holding. So the small cap is still holding. So yeah, but this is mostly mid cap and bigger caps. And then we have Nasdaq, and you can see it's really not moving much, the AD line. And you can see the accumulation distribution now is C, which is average, really. So the tech stocks are definitely not doing as well. Yeah, so that's that. I want to highlight that. We'll go to McBoss Capital here, data, and we highlight earlier we had 3 distribution days. That's not a good sign. But despite a distribution day on Friday, we saw accumulation much higher on the number of stocks than distribution on both Wednesday, Thursday, and even Friday. So despite a down day on Friday again, we're still seeing high accumulation, which is very interesting. And then the groups wise, same thing. We're seeing more accumulation than distribution. And on the sector side, you can see technology has been underwhelming this whole week. Retail also underwhelming. And then the stronger ones are industrials, commodities even, and financials. And then health pick up a little bit, again, not as strong. Same thing with tech, right? So, but yeah, so we're still seeing strength in industrial, commodities, and financials here. So that's something interesting. All right. Yeah, I forgot to show this other feature. So one feature, like I said, one of the new features is the earnings line, right? And then the other feature is they also now show the estimation here, which is much better, because before I would have to like use one of the tables below and customize it, and then I have to search for it, right? Right now it just shows up here now. So we look at Microsoft. You can see Microsoft has already topped 4 weeks ago, and we look at the daily chart. I mean, it's not like that bad. It's like kind of in the middle of this consolidation right now, right? This is the middle right here. So it's not that bad. It's still holding the 10-day. So we go back to this earnings panel here. So here you can see now, right? So last March it was at 245. This March, so this current quarter, right, which obviously won't be reported to you like end of April or something like that. You see it goes up by 15%. So now it has the estimation. I don't usually look at the next few quarters, but they do show it now. Like honestly, it can change so much, right? So I don't know, but I guess it's just a projection of what it looks like for the next whole year. Because usually in the past, I just look at this number for the next whole year. You can see it's up average 19%, 1166 is the total. So you add this up, it's probably going to be around 1166. So that's the kind of idea here. But yeah, I usually only look at the next quarter. So you can see it's going to jump to 15%, which is pretty good. Yeah. So that's a new feature too. So then now it's much easier to look at something. So if you go to Nvidia, you can go back down. You see the next quarter 400%, and then after the 4 quarters of 400%, it's going to slow down, obviously, right? It's not going to grow as fast, but who knows? It could continue to grow faster than people think. Just like what they projected a year ago was much lower, right? So, okay, so let's look at other stock. Amazon. So we're gonna go back to daily chart now. So see, Amazon also had a new high this week. So that one was Monday. So this is another thing that I'm always like, you know, I notice it on this chart is that, you know, when it top, how many days it take before it come back, right? And then when it come back, is it strong? So like look at this one day here, it engulfed 5-6 days, right? Just one day alone. So those are the two signs, right? When it top, like right here, look at how many days it going sideways or going down, and then how long does it take to come back up? That's how you kind of distinguish, like, is there a strength in this stock or not, right? And so this one looks okay right now. It's only 4 days in, and it's not going down further. It's going sideways now. So it might take only 1 day to make a new high. So, you know, stuff like that. So those are things good to pay attention to. Google, again, this is still on the downtrend line. It did come back on Friday a little bit, but you see how it reversed as well. If you look at the 15-minute chart, so early on, this is not good, right? So because it went up and then it went down. So generally, like something I do now more than before. I never actually do it before. I like to like take the first hour, like 1, 2, 3, 4 bars. 1, 2, 3, 4 bars, and then draw a straight line across the first hour, and then see where it closed related to the opening of that hour. Because after that hour, generally, all the retailers are gone. Because most retailer investors, they trade in the first hour, and then after that, it's all institution. And then usually the last 10 minutes or 15 minutes is usually also retail people come back, and so this you can see how it closed. It's not very good, right? So that's not a good sign. So yeah, so when you have a day like this where it kind of it didn't close at the top, look at the 15-minute chart and see how it actually opened and closed. That's a better sign to look at. Because if you just look at this, it looks like it's okay, but it might not be actually, right? So again, we're still in the downtrend, and again, we got reversed at the top here on the channel line. So this is not good. The downtrend is still intact, so it could go down lower, and you know, this is a, 200 day, oh, this is 200 day right here. So it did find support because it bounced back. So we'll see. It might test it one more time. All right, let's Google Meta. So Meta is strong, right? Meta making a new high on Friday, just like Nvidia did. Again, I don't know if it actually. It looks like it did undercut the low previously. Yeah, it did. 501,499. So, yeah. So that's usually again not a good thing. But this stock is strong. Why I say it's strong is because, it's just trading so tight, right? Like, from week to week. That's usually a sign of institution like holding the stock up. They just don't want to let go. Otherwise, you will see more volatility. And if we look at the earnings expansion here for next quarter, you see 45% growth. That's a pretty good number. On earnings, on sales that are, at a higher point, 26%. So yeah, I mean, this has strong fundamentals, right? And look at this earnings line. This one matched quite good, right? This one matched quite good in terms of like where top and bottom. So which means like usually that only happens if it has drastic turn in the quarter, just like Nvidia did. So here we have the top, and then here we have the bottom. So this one bottom, you can see right here, bottom right here. So it took a quarter to change the numbers because again 4 quarters. And then finally it turned, here. So, as you can see the numbers, right? It turned right here. So, yeah. So this is, yeah, I like this feature a lot, So that was the most requested feature, this line.
I like it too. It's an earning line, right?
Yeah, that's right. It's earnings line based on 4 rolling quarters, right? To smooth out the line. Because otherwise you will see like, sometimes it won't be smooth, right? Yeah, what else did I miss? Let's look at Tesla. So Tesla didn't have a good week as well. It was holding up, and then I think Friday it went down, right? Oh no, it's just bad the whole week. I thought
it was bad.
Was there any news? I can't remember.
No, there is no news.
Oh, okay. So it looks like it hit a, definitely market close hit a new low. So yeah, I don't know, man. It's not looking good. Yeah, because when we talked about this last week, this would go back really far now, like early 2023. That would be the next level, support level 152. So yeah, this is on a huge downtrend, and you can see the 50-day line is like going down pretty steep now, so that's not good. So like honestly, the probably no one talk about this as much as the gold, because this gold thing, it's finally breaking out, right? It's finally breaking out. I mean, this is huge. Look at how big of a move it is once it broke out, and and because this is a long-term like trend line right here, and so it finally broke out, and it followed through. And you can see on the daily chart, like look at this line right here. This is insane, right? 1, 2, 3, 4. Like yeah, it broke out last Friday, and then it just followed through this whole week, man. Like oh my god. So yeah, and I mean this is the gold bullion. So this is the gold minus ETF, and you can see it's strong, but when you look at the overall chart, it's not the same, right, as the gold bullion. And that's something Jim Roper talked about. I believe it was him. I can't remember. Either IBD Live or him. I can't remember who talked about it. Is that for some reason this time around, the gold bullion is much stronger than the miners. They said that in the past it's usually the opposite. Usually the miners are stronger than the bullion, but in this case it's not. So, you know, and that's the reason why I don't have any gold stocks on my list, right, on my watch list. So that's why I missed the breakout, because the gold bullion is really what really mattered this time. But nonetheless, I think some of the stocks are, you know, doing well, and so some of the ones that I see here, I think HMY is one that Jerome Powell, I don't know if he owns it or watching, I don't know, but he mentioned this. So yeah, so this guy broke out, right? So let's look at this earning lines, look pretty good. So let's see. Yeah, see, look at these numbers, they're climbing, right? So 4 billion cap, 714. So definitely not big, you know, but it is something that's moving. And again, I missed this breakout right here. This stock is definitely very challenging. It reminds me of SMCI because it's so choppy in the base, and it tested people so many times. And usually when it does that, like SMCI, when it after that happened, once it breaks out, it's going to be like use the 10-day as your stop and just let it ride. So I don't know if this is too far now. This might be okay from this breakout. Like it might be like within, I mean, it's a little bit extended, probably like 7-8% extended. I don't know, I have to calculate. But yeah, it could go a lot further. So especially if gold is gonna go strong. So I think, yeah, you know, I probably will take a smaller position if I get in. But the numbers look really strong. I don't know about the other stocks. It's just something I saw. Let me see. KGC, Kinross, it's okay. So this one is not as strong for sure. It's coming up though. AGI. Okay, so this is also coming up. So I guess, you know, they all have built a base on base pattern. And base on base pattern are usually pretty strong too. So, because they have consolidated for so long, right? So once it moves, it finally starts to move. So that's another one. And then the last one was Red Gold. This one, okay, this one also not looking as good because even this high didn't come close to this high. But here, you know, on IV, this tool, you can see they show the most strongest relative strength. So I don't know, BVN. I don't think I've seen this one before. Let me check it out. Peru. This is from Peru. Oh, this chart is strong. Look at that. This is a strong chart. This looks like almost like a high type flag kind of pattern. So this looks pretty good. This has the highest relative strength. AU is the second one. Yeah, I traded OR before in GFI. So this one is coming up. But it's, you know, but what I find interesting is like, why is gold breaking out all of a sudden, right? Like what's happening in the macro, you know? So that's interesting.
Yeah.
Like after so many times it failed to break out, just like Russell, like all of a sudden it broke out. So I don't know, man, what this means in the macro. So we'll see. We'll find out later. Because gold is a hedge against inflation, right? So in general, so does that mean inflation comes back? I don't know. That's a very interesting thing that's happening right now. So anyhow, yeah, I thought I need to talk about gold because like I missed this breakout big time, but I think it might not be late because like I said, you know, if this gold is going to go much higher, and it can, usually when it breaks out after such a long period, it could go up a lot more, you know, because the new trend has started, right? So like this right here, and then this breakout, you know, it could spark a long-term trend here. We don't know. It's highly likely. And Jerome Powell talked about this for years now, like because you know he talked about it since like here, like it keep failing, and then it got tighter and tighter and tighter, and then boom, it happened. So Yeah, I was hoping for a pullback. That's why I didn't get in this week, but it's just so strong it won't pull back. For me to get in. So now I'm late to the game for sure. I'm taking a lot more risk if I do get in. Anyhow, that's that. Any other questions about gold?
Can you check Newmont Gold, NEM,
Oh
and
yeah.
JNUG?
Okay. So this, let me go to daily chart. So Newmont mining, yeah, I mean it's definitely not the strongest one when it comes to the chart. And then the other one is just jog, right? Okay. How do you spell it? JEGG?
So JNUG.
Yeah.
That's what I heard.
Okay, junior miners, yeah. Yeah, they're definitely moving, like I said. Yeah. I mean that's another thing, right? If you these are the junior guys, definitely, you know, lagging compared to the other guys that we saw earlier. So yeah. I forgot to talk about the wicks, and yeah, you know, it's been very stable, right? Like it just doesn't make new highs. I mean, it is making new highs, new lows, but it's not like a big move. Um, Even this week, I was surprised how low the volatility is, and even Friday. I mean, it's not a big move. I thought it would be a bigger move, but it wasn't. So very interesting. It definitely feels like, you know, the market is very complacent where it is. That may be a good sign, right? So we'll see. Because, you know, but like so far, you know, even Friday, I was thinking that the volatility would pick up, but it didn't. So again, it's the reason why it's not happening, as we saw from the accumulation and distribution, there's a lot of buying in stocks too. So we're still under accumulation, right? So so that's the reason, right? So techs may be suffering more, but we're still seeing strength in other areas. So that's very interesting. So I think, you know, it's possible to trade this market, and I think some traders actually love it because, you know, there's still lots of things happening. Okay. So yeah, like, you know, the blue highlight is the ones that did well on Friday. So NTNX did well. This one is IoT. We saw that, right? So let's go look at IoT chart. IoT, was consolidating before yesterday's breakout, and so here's the consolidation here, right here. It's a pretty flat base. It's a pretty good base, and this is you know, people who have been investing in IoT probably hasn't been happy because it hasn't really moved much. This is a base on base and base pattern. But yesterday, you know, like, you know, this last few weeks, you know, something definitely changed. You can see the volume, right? And then the breakout happens on the highest volume. So this is exactly what you want to see on the breakout. Highest volume, you know, and a nice clean breakout, close near the top. So now we wait for the follow through action. If the follow through confirms it or not. If the follow through doesn't falls back much, and just, you know, and then start to bounce again, that will be a nice kill if you don't want to buy it right now. This is not too extended right now, 6%, but like I said, this is going to be a choppy market the next few weeks. I don't know, like some of them gonna fail, some of them not. I don't know who's, you know. But if we look at the weekly chart, this is, like I said, this is a nice base on base pattern. So here you have a double bottom, and then you have this cup base, and then you have this flat base. So this has the under consolidate for quite a while, and it hasn't made a big move, right? The last big move was right here, and then this one. So yeah, so the numbers are really good. That's one thing I've noticed. Look at these numbers, and then the next one, it's not too bad. It's also going to turn positive. So yeah, so that's IoT. All right, then we have DY, and then DY is doing well. Let's just look at it quickly. No one talks about this stock. I never heard anyone talk about this stock. So yeah, I don't hold many stocks left. Most of the tech stocks I've already sold. This is one that I'm still holding. It just moved up nicely as telecom infrastructure. It's a nice clean breakout right here. And yeah, so I'll just let it say a trailing stop for me right now. I just let it ride until it stops me out. So that's DY. The one that came out on yesterday, a smaller name, PGY. Yeah, Computer Software Financial, very small name. Right here, it did a split. Maybe that was the reason why it moved. And yeah, I mean it's not a perfect chart for sure. It's very volatile. So, but one thing I like is the volume that came out in the last few weeks. And so yeah, so I don't know. Again, this is a very new name on my list. I don't know what's wrong with this bar right here. So this is not right. Oh yeah, because it's split. So they probably didn't fix the chart for this. But the numbers are really solid. Look at this, right? So next quarter, 100%. Yeah, because it's going to turn positive. So look at these numbers. It's going to start to rise here in the future. So this is very strong estimate. Yeah, I don't know what's happening with this. Like I say, I don't know this company. I just saw it broke out yesterday. But you know, this is gonna be more volatile than most stocks. This is a very tiny market cap, and so it's gonna move like easily 5-6% a day. But other than that, there's not many tech stocks in general that's doing well. Kawa, let's talk about Kawa. This GPS, gaps, right? Vital Farm and Royal Caribbean that are making new highs. So a lot of them are just either going sideways or going down. So really not much to look at. Kawa is really strong. Again, everybody talking about this company. A lot of IBD guys, they all keep talking about going in there and eat. It's really strong chart pattern. I mean, this is very strong chart pattern. It's starting to curve up. It's definitely extended right now. Same thing. You know, this is not even extended if you look at the longer term picture. This is IPO stock, but you know, it's funny because yesterday it didn't correct. Like the market correct, but this one didn't. It did pull back though, like from the top. So we'll see how it continue this move. Volume has really picked up, right? Since this pullback, it has really picked up, and so more people, like I said, more people talking about this stock now. It's very resilient for sure. The earnings line, look at this earnings line, is starting to like really grow, and like I say, everyone talking about this restaurant. So could be one of the few retail stock that do well in the future. So yeah, that's pretty much it from retail side. Not too many strong stocks. G is still running on the industrial. Road still running. LPX, FLS. So industrials are really strong, right? But some of the stocks starting to fall, right? Like one that I was trading even up to this week was VRT. It hit a new high this week and then it started to go down. So I hit my stop. So it's gone from my list now. So yeah, it's trading really tight here. It's not a good action on Friday, but who knows? This stock is so resilient. It's like it just keep coming back, man. But the one other stock that really fell is I think Powell. Yeah, this one has fallen. Oh, yeah. So this one has finally fallen, right? So you see how it reversed, and then the next. So this is the scary thing. Like I'm not saying Nvidia will do this, but when it falls, and then it undercut the 10-day, got to the 21-day, and now it fell the 21-day. That's really bad. Just in 3 sessions, man. and then now we're further down below 21 day, and now 50 days right here, right? So that's why I said, like, this is a strong stock, right, up to this point, right? From here to here is a strong move. I mean, this is 100 breakout to 200, right? So this is a strong move, and this has fallen. And like I said, I'm worried BRT will fall too. Those are the strong ones. Anyhow, move on. The medicals, again, a little bit choppy, but overall, I mean, sure, Lilly and Mio, like if you look at those two, they were hitting new highs. I don't know if it did this week. Let's see. Yeah, I think it Monday was the top, and now it's starting to fall to 21 day. NBO. Okay, so this one has some good news on Thursday, right? I can't remember the exact news about the obesity drug. But I don't, see, this is the problem, right? Like, this is one of the selling signs when you have the highest volume after extended. So that is a sell sign. So we'll see how this behave. But the third obesity stock that is, starting to catch a name now is this guy, VKTX. He got FDA approval recently, and now this guy has fallen. So that's also not good. So there's OMI. This one is still holding, I believe. Yeah. So this one has a breakout here. It's still holding. 10 days is still strong. NBIX just broke out. Well, kind of, not really. It's a lower breakout point, a more aggressive breakout point. Volume was there, so I took a small position yesterday. The other one that broke out was Dexcom. Same thing, broke out right here. Like, look at how it pulled back to the buy point, and then it rebound. So that's exactly the kind of action you want to see. So I also took a position yesterday. Again, I mean, these are all defensive, right? I don't know if they're growth. It could be, but at least it hasn't shown it yet. So, but yeah, ANIP is another one. Okay, so ALC, those are the ones that are making new highs on relative strength. Is the ASTH. On the oil commodity side, like, I mean, okay, we can take a quick look. Like TDW. Like I said, this week oil has taken a step back. So the stock here, I mean, this is pretty tight action. Like, this is the breakout point, and it doesn't want to come back to the breakout point. So that's really good action. I like it. So Weatherford. This one is also, breakout. And again, look at how tight this is trading. It just doesn't want to come back down. Really strong action. Really strong. So I like those. FTI is the other one. This one, yeah, look at this one. This one bounced off 10 day and bounced back, right? So, it hasn't really broke out yet, at least from this buy point right here. But it's looking really good. So those are, I think the other one, oh yeah, CCJ and CEG. Okay, CCJ is the, I think it's coal, right? Coal. Oh no, mining. Yeah, uranium. Oh yeah, this is uranium. Okay, so this one didn't do that well yesterday. So this one is not good. It fell. Thought it was coming back up, but see how it fell on the 50-day line. So that's not good. And then the other one was CEG. This is alternative energy. I don't remember which alternative energy. Okay, so this one fell back to 10 day. So this one might be trickier. We'll see if it hold the 10 day or not. Anyhow, so that's a few commodity stocks. On the financial side, you see it probably had the most new highs in my tracking here. So we have Toll Brothers. So Toll is still doing well. So let's take a look. Toll Brothers. Look at this, nice uptrend. And then we have JXN in insurance. We have Airy in insurance. Lots of insurance. We have XP, American Express, in credit card. XP came out yesterday. This one is very choppy. Prudent Financial Insurance, SQ Square. Let's take a look at Square. Oops. Square. Yeah, it's trying to come out. So this is the highest close yesterday in a while, right? So this is high. This is really strong action. I didn't get into it, partly because I wasn't watching it, but it looks pretty good. Like I might consider taking a position in this, but again, I'm worried the market will go into correction, but I'll take smaller positions and see where it goes. That's pretty much it for the list here. In terms of the ones that have fallen, or start to fall anyway, Spotify hitting new lows yesterday. You know, some of this hitting new lows this week. Let me see here. Toyota, even Toyota is starting to hit new low on relative strength. BR, ISG. Let's see here. Yeah, even Netflix, right? Let me see. Netflix. I mean, it's still pretty tight. So, we'll see. I don't know. I feel like the relative trend is starting to like really slow down. But this stock has been. The problem with Netflix is it's hard to trade this stock because they always move on earnings, and then after that big move, it kind of like move very slow. That's the problem with Netflix, because it's no longer in the big growth cycle. Yeah. So anyhow, yeah, we already talked about RT Power, Sterling. All these guys are topping. Talk about with KTX. Some of these are topping too. You know, I don't know if they're topping, but the relative strength is slowing down. Yeah, like this. Let's look at some Bitcoin miners, right? Okay, let's look at GPTC first. So this is still strong, eh? I can't believe how strong this Bitcoin ETF is. It's much stronger than the stocks, eh? I don't know why. Is it because Bitcoin is still high? It's near high? Did it close at the high yesterday?
No, it's hovering near high.
Okay, near high. Yeah, it's definitely stronger than like the stocks, I think. So let's see. It's like see where Mara is? It's like much further from the top. But I don't know. And maybe this was because of the earnings. But let's look at the other one, MicroStrategy. Okay, so this one did make new high. So this is really strong.
This is strong.
Coin
is also very strong.
Oh yeah, this also make new highs. So they did all make new highs. Any other ones? I don't really watch the other ones.
Yeah, so what I have done is I was into all Bitcoin related stuff, but the miners will, like, after halving, miners will not be that much attractive, right? Because their reward will be less.
Yeah.
So I think best play is coin and MSTR.
Okay. Cool.
But there is one crazy stock, CLSK.
Oh yeah, CLSK. Yeah, you mentioned this.
Which is like they don't have much holding of Bitcoin, but still.
Yeah. So this one fallen back quite a bit. So it looks like MSTR still doing well. Yeah, and then the other two stock that on the financial side, this one was highlighted by IBD. Yeah, looking pretty good. It's holding tight. So it didn't want to come back down to this breakout point, so that's a really good sign. So this is insurance. The other one's tree. This one is finance. Interesting, this one. This is the only finance stock mortgage related. Yeah, this one's hitting new highs, see? It's very choppy though, so So, but right now it looks pretty good. So 45-degree angle. Yeah. So like I said, in general, this week I try a few stocks, especially like newer names. Oh, I actually went back into CrowdStrike. Again, I'll try it. I don't know. I said a very tight stop. So if it trigger, like I said, it probably won't work. It has a good earnings, right? But we'll see. It's a really hard time for some of the, like if chip stocks fall, like I know the software stocks, right, are already fallen. If you look at IGV, you can see relative strength very weak, and it hasn't made new low yet, but it's definitely trending down. So we'll see. So that's IGV, and if you look at back at SMH, if this guy obviously has been the strongest one, and we just don't know how much it's going to pull back from the top here. So that's the unknown right now. But if it does pull back, don't be surprised if it go all the way to the 50-day, and that will give you a new opportunity to buy, right? So that's pretty much it.